So the question is Snapchat's crash symbolic of the social media fall? In other words, is what's happening with Snapchat going to happen with other social media companies, as we're seeing a lot of fallout in the social media space? So welcome to the Valuation Masterclass case study, where you'll learn about interesting stocks and how to value them. What's interesting about Snapchat is that its share price is 82% below its October 21 all-time high. This is Andrew Stotz of the Valuation Masterclass. Let's get started. Now, remember, this is for information and learning purposes only. It's not investment advice or recommendation to buy or sell. Let's look at the share price of Snapchat. Here we can see the share price of Snapchat basically had surged all the way up to 83 during the pandemic. However, subsequent earnings releases were very disappointing and brought the price back to pre-pandemic levels. So how can you do research like a professional analyst? Let's look at this now. Let's look more deeply into Snapchat. Let's go to the latest annual report. Here we can go to the web page of the company, and we can look for the annual report. And what you can see is the cover of the annual report, very creative. And now you can see the Form 10-K, which is what they're submitting for their annual report. And then you can see the table of contents of that particular report. Now, again, we like to focus a lot of time on management discussion and analysis, because that's where we can sometimes pick up data. Of course, we like to look at all parts of the annual report, but the annual report of a company is 102 pages long. It's not often that we can get into every bit of it. So first, you need to understand the underlying drivers. Let's go to page 48 of the annual report. And here we can see user metrics, and it says daily active users, or DAUs, increased to 319 million in fourth quarter 2021 compared to 265 million in fourth quarter 2020. So they are growing. And the average revenue per user, or ARPU, increased 18% to 4.06 in fourth quarter compared to 3.44 in fourth quarter in the prior year. This gives us some idea. Okay, good. The company's growing. That's nice. So what are the internal drivers? That's the question. Remember that revenue is equal to price times quantity. Let's keep it simple. Let's just generally look at the concept of quantity-driven revenue growth. Maybe a company is adding outlets, or they're adding capacity, they're adding staff. Maybe they're expanding to another region or another country. And maybe they're entering another line of business. And also it could be that they're taking over a competitor and growing through acquisition. All of these are quantity-driven stories. So last night, we in the office hours of the Valuation Masterclass Bootcamp, Abigail was asking questions about how do we come up with a story. This is one of the ways to do it. Now, the price-driven strategies, or price-driven drivers of growth, are charging a higher price, shifting to higher profit margin products, as an example. These types of things can be shifts that allow us to see revenue growth. Now, let's look at Snapchat. First, we can see that increase the number of daily active users. That's a critical component for their growth. That's the quantity. So let's look at that quantity. And here we can see that Snapchat was able to rapidly increase its users over time. And we can see at the top, on the top right of this bar chart, 319 million globally, and it's been growing every year. Now, what we can see is that North America and Europe are maturing. They're very flat compared to the rest of the world. And of that rest of the world, most of it's coming from Asia. So now we have our breakdown of the drivers. These are what I call internal drivers of revenue. They're driven by the company's expansion plans and revenue plans, in particular advertising revenue. So now we're looking at this component of pricing, and Snapchat still has some difficulties monetizing its users. The quarterly average revenue per user has kind of been up and down, but it's at about $4 per person. And I believe that's per year. Though it makes a lot of progress in the US, they've gone from roughly $3.50 to $4 per users of ARPU up to $9.58, which is pretty amazing. They've gone up to 10. They've done well. And Europe is increasing. It's almost doubled, but it's still very low. And you can see the rest of the world, in particular Asia, has been extremely low. They just haven't been able to figure out how to monetize that. So my valuation masterclass students learn how to create a revenue breakdown and forecast by, well, paying attention. Watch what we do here. From the annual report, we can extract the data for quantity and price. So the first table at the top is the daily active users, and that is the quantity. And then the table at the bottom is the ARPUs. So we have quantity in this case, and we have price in this case in the bottom one. And we can see the ARPUs, the average revenue per user. And we can observe what's going on with this company a bit. We can see it's gone from 205 up to 300 million. So they've got some good growth there. And a lot of that growth is coming. You can see it's almost doubling here from the rest of the world, whereas the US is kind of flat or slow growth. But we can also see that the rest of the world, the ARPU is actually going down from 6 to 5.2 to 4.7. They're adding a huge number of users and they're not able to monetize those users. So quantity and price gives us revenue. So if we multiply these times each other, we now can see that the revenue actually, even though the ARPU was falling for the rest of the world at 4.7, we can see that the actual revenue from the rest of the world has been rising. And that's just because of very, very strong growth, right? And that strong growth ultimately is leading to more revenue. In fact, this business is not bad. It's gone from about 1.7 billion in revenue up to about 4.1. Today, I had a discussion with my interns and I asked them, why is Snapchat share price coming down and why is it dying? And they said, nobody uses Snapchat anymore. And we went through a lot of different reasons about why it's potentially not doing well, but truthfully, the revenue's not bad. So now we have our framework for forecasting revenue. Remember, what we really want is just this bottom line. We want to be able to fill in these items. So we want to understand the latest business developments. So we can go into the presentation. We can go to quarterly results. We can download the PDF to see what's going on in the company. What are they saying? So Snapchat sees a massive opportunity to expand. Here you can see, coming from their report, Snapchat estimates the total addressable market to be the number of global smartphone users. That's the hell of a lot, right? There's 400 million smartphone users in the US, 560, and then 2.5 billion. So we're talking about pretty serious 3.4 billion people that they think is their addressable market. Now, we already know that doesn't really make too much sense because, for instance, in my case, I'm never going to use Snapchat. So even though I have a mobile phone, I'm not going to download Snapchat. So this is why the penetration rate looks rather small. And there seems to be a massive amount of upside for Snapchat. Come on, the opportunity is huge. That's the way the company is presenting it. But the relevant market is mainly just young people, like, as I said, not just me. So here you can see that this chart coming from the company talks about all the different things that happen between the ages of 13 and 34, and that is their target market. So penetration is already high for that main target group. Here we can see that there's high penetration in most established markets. They have 90% of the 13 to 24-year-old population and 75% of the 13 to 34-year-old population. That's tremendous penetration in the US, UK, Australia, France, Netherlands. So, but this means that growing quantity, meaning the number of users, is likely coming from emerging markets and in particular, Asia. So now we can start to think about how many daily active users do we think that the company is going to have? So let me look at this in a little bit more detail. We can see that it was 125, and maybe those users is going to grow up to 160. We're a little bit conservative there, and then we can see that pretty slow growth really is not particularly great growth that we've got forecasted, but we can also see that this is up 31% from 2021. So the growth that is happening is mainly coming from the rest of the world. Now, we need to forecast that price component. Now, students always ask in the boot camp, like, how do I do that? How do I know what the price is going to be? Well, the first way to start is look at past trends. So we can see that the ARPU has gone from 12.8 to 18.3 up to 30. That's pretty significant. In fact, that's so high that I would say it may not be continuing to go higher and higher in the US. But here we see that Europe's gone from 4.7 to 8.3. That's a pretty sizable increase. And here, of course, we can see the rest of the world going down. So let's try to come up with some forecasts. So how good is Snapchat in monetizing its users? We got to think about how does it get that ARPU from the users? So let's look at Facebook. Facebook gets an average revenue per user of $40. Now you may say, Andrew, I never pay Facebook. Yeah, but the advertisers pay Facebook. So that's what's happening. And if we look at Twitter, they're getting about $20 for the average user, and Snapchat at about $14 for the average user. So the US market seems to be the easiest one to monetize. Here we can see a little bit of information that they're giving. The North American market is priority number 1 for Snapchat. While it has 3 times more daily active users than Twitter in the US, it generates less than half of the revenue per user. So is this a quantity story or a price story? I would argue that it's a price story. They've got to get more. So here I've put in increased price. In fact, the ARPUs, in this case, we can see that ARPU went down, as I said, for the rest of the world, but we're going to forecast that they're going to have to find a way to start to get that to rise. And here we can see Europe is going to rise and US is going to rise. We're almost forecasting double. You could say that we're being pretty optimistic from 8.3 up to 20. It's a pretty significant rise. But overall, that gives us an ARPU that goes from 13.7 up to 26. So basically doubling in the next 1, 2, 3 years from 2021. Now, actually, if you look back, you can see that the company has already almost doubled from 8 to 13. So it's not unreasonable, particularly if the company has to focus on generating more revenue. So now we have the price over here, the price times the quantity. So we can then derive our revenue. And this is the way we do it. So here we now have the revenue, and we can see the end result is that that revenue, we expected to go from 4 billion up to 9 billion. So basically doubling revenue over that period of time. Now you may say, Andrew, that's very ambitious, but hey, come on. They already doubled revenue from 1.7 up to 4 in the last 2 years. So if they can get it right, they can really increase that revenue. So now we have the revenue expectation based upon one forecast. We can look at many different forecasts over time, but we can see that 9.5 billion. So before we continue, for those of you that are not in the boot camp, feel free to consider joining the boot camp. And the next boot camp starts on July 25th. And I think you're going to get a lot of support from the existing students who will be mentors and supporting you. Just go to valuationmasterclass.com/bootcamp to learn more. So great growth outlook, but why did the share price fall? Well, let's take a look at the recent filings. We can go into the current filings that they've done at the SEC. What's an 8K filing? Here you can see 8K filing, in addition to filing annual reports, which is 10K, and quarterly reports on Form 10Q. Publicly reporting companies must report certain material corporate events on a more current basis. That's Form 8-K. It's known as current report, and it is a report that companies must file with the SEC to announce major events that shareholders should know about. Companies generally have, as you can see at the bottom, 4 days to file the form and an event that triggers the filing requirement. However, if the issuer is furnishing an 8K solely to satisfy its obligation under Regulation FD, then the due date might be earlier. In other words, if management went out and they talked to a small group of investors and they said something accidentally about the future or what's happening in the company that was not public, but it's material information, they may go under Regulation FD, meaning full disclosure. They may decide, oh, we got to get this information out immediately. And they do an 8K, a Form 8K filing. So Snapchat recently did an 8K filing. We can see here, and that filing happened on, what's the date here? Where's my date? Okay, May 23rd. So today is May 27th. This just came out. So here we can look at some forward-looking statements, and one sentence has driven stock market sentiment on the stock. And that is, since we issued guidance on April 21st, 2022, the macroeconomic environment has deteriorated further and faster than anticipated. As a result, we believe that it's likely that we will report revenue and adjusted EBITDA below the low end of our Q2 2002 guidance range. Now, stop and think about that for a moment. Wait a minute. The Fed is increasing interest rates because they told us that the economy is strong. And now inflation is high. We've got to slow this down and all that. But wait a minute. Why would companies be announcing that the macroeconomic environment has deteriorated? Well, in my opinion, that is part of why I do not expect the Fed to continue to raise rates. The consensus is the Fed's going to raise rates significantly every single time they meet over the next 12 to 24 months. I say no way. Why? Because raising rates into a recession is just disastrous. And look, the Fed got it wrong on inflation when they said that it was transitory, and it wasn't. And now I would say that the Fed's getting wrong by increasing interest rates into a recession and, in fact, accelerating that recession's arrival. So, in fact, we're not that smarter than before. A company always has more information than any investor has. And the company did not provide any guidance on how bad the impact actually is. They just said that it looks bad. The only thing we can take away from the company's statement is to reconsider our revenue drivers. But if we take a look at Snapchat fundamentals, the market correction was just a question of time. Let's look at the fundamentals of Snapchat. Here we can see that the gross profit margin table that I've got here shows that Facebook is the gross profit margin champion. Snapchat is worse than Pinterest, but truthfully, Snapchat's not bad. Look at that, 57.5%. And it's gone up from 13%, you can see right here, all the way up to 32, 47, 52. Wow, they have really done a great job at the gross profit margin level. Well, why is that? The reason why that is because they've been expanding users. And remember that gross profit margin is revenue minus cost of goods sold divided by, gives you gross profit, and gross profit divided by revenue gives you the gross profit margin. And what you can see is that what is the cost of goods sold or goods and services for a company like Snapchat? It's programmers. And you need only so many programmers. And then eventually what happens is that you have enough programmers, and then you've created a good product, and now you just scale it. And so this shows the power of leverage or operating leverage, where the cost of the programmers was pretty stable over time. But what you can see is that as revenues rose, the gross profit margin rose. So at the gross profit margin level, well, that's good. However, that's step number one. But let's go to step number two. Here we can see the earnings before interest and taxes. And you can see every single year for Snapchat, it has been negative. So Facebook is the EBIT margin champion. Google is second place. And the operating business is a disaster at Snapchat. So remember, when we look at this on a P&L, we can say that we have revenue and we have cost of goods sold, and then we have gross profit. And that gross profit, in this case, has been about 50% or so, let's say. And then we have all the other expenses necessary to run the business. These are administrative expenses, management expenses, all of those. And then we end up with earnings before interest and taxes, or EBIT. And what we can see here is that the weakness is actually revenue is okay. Cost of goods sold is good. It's been going down, and gross profit is good. But when we see the EBIT margin being so negative, it means that the expenses of the business are super, super high, and the gross profit they're making is still not enough to offset that. So the fundamentals of Snapchat are really difficult. But however, I would say that I have made money investing in companies that were having a negative margin if it was getting less negative, less negative, less negative, and less negative. So you could argue that maybe it is a time to buy Snapchat now that it's down 84%. And my question to you is, would you buy it or would you sell it? So finally, the net margin. We can see that Snap has never made a profit, Twitter only in 2018, 2019 because of tax adjustments. And Facebook and Google are killing it. So this gives you some picture about what's happening at Snapchat. Finally, let's look at free cash flow of the firm, because that's what really matters. And here we can see that Snapchat is bleeding free cash flow to the firm. Twitter's returns to investors has been tiny, and Facebook and Google are massive value generators. So my question is Snapchat's crash symbolic of the social media fall that we're seeing happening in the market? Well, that's the presentation. I wonder if you have any questions. I know that some of you have written down questions on LinkedIn or other places. So could you just speak out your question? If you have a question right now, feel free to speak it out, and then I'll try to answer it. Otherwise, we'll wrap this up. Any questions?
I've got a question.
Yep.
Yeah, okay. So the ARPU for the rest of the world, you said that they have to get to do it better. What was, can you go back to that slide if that's okay?
Yeah, hold on. Hold on.
I remember like we forecasted it to increase the ARPU for the rest of the world when they haven't been able to do that. So how are we just going to justify that?
Well, in this case, I think this is the challenge. And as an analyst, I'm just kind of plugging in numbers right now. I'd have to do more work to justify this getting up to 9. And I'd have to do more work to go from 30 to 60. So this is my first time looking at the detail of Snapchat. So I think that you've nailed exactly what is the big issue. The big issue is, can Snapchat increase its ARPUs? Now, if we look at the past, we can say that they did increase their ARPUs relatively well. We can see right here from 8 to about 14, nearly doubling. So as an analyst, what we would do is we would look at how did they do that? And then we would ask the question, what new things are they doing that they think they can monetize this Snapchat? So that hopefully answers that question.
Yeah, but I don't think they have a good deal, because I personally, I don't feel like Snapchat offers anything distinctive. Like whatever they offer, Facebook does too. And for them, like clearly they're losing still. So for them to get any more market, I don't see that happening quite as yet.
Yeah, it's interesting because when I was talking to my interns today, and I was asking them, because they're young and they've used Snapchat. I never used it myself. I've seen it before, but they were like, Snapchat's dead because Instagram took away, the Instagram started doing stories. Instagram could make it so that your profile's private, so you didn't have to go out there. And then for those people that wanted to become more public, you couldn't really do it on Snapchat, but you can do it on TikTok. So the result of all that is they think Snapchat's dead. But let's not forget here, that is potentially a bias that may hurt you as an analyst, because, hey, they've gone from 200 to 300 new users. That's 100 million new people have signed up between 2019 and 2021. Those 100 million people have other options. They have WhatsApp, they have Telegram, they have Instagram, and they're still signing up. So this is a really tough one to forecast. I think the key ultimately is that we can probably accept this growth here, that maybe they keep growing. Okay, possible. But really the key is this is a price story when it comes to revenue. All right, other questions? Very good question.
Yeah, I have a question.
Yep.
Dr. Stolz, how did you calculate the projected price and quantity growth rates applied for revenue projections? I understand that this based on the historical data, but actually what the number of historical periods, historical years should be used in our forecast?
So the first thing is that this is not a valuation. Next week, we're going to go over forecasts and valuation, where I'm going to show you how I would make those assumptions. So this is more of a discussion of how to set up the structure. But ultimately, the question for every analyst that's looking at forecasting a company is, how do I make these assumptions? And I honestly must say that in the end, analysts are always, of course, looking for something that we can use to hang our hat on, to say, this is why I think ARPU is going to rise. But a lot of times you just don't have that much information. So first, we're going to talk to the company. Second, we're going to look at the competitors and see what they're doing. We're going to see what trends we think are happening. And this is why it's important to be a sector specialist, so you know what's happening in that sector. But in the end, you ultimately, I would argue, end up going a lot with gut feeling with some evidence, but there's no way that you can prove it until the time comes. One of the things that I try to tell students in the boot camp is that basically don't get too hung up on trying to mathematically prove what it's going to be, because it can easily be something very different than that. So it's a combination of a structured way of thinking, like you're seeing here, and outside evidence that you can find, and then after that, applying your own judgment. Other questions?
Sorry,
Yes,
I have a question.
Yep. Go ahead.
So my question is that, while you were making your assumptions, you were making references to the company's financial statements. So I'm actually going to ask that. Okay, let's say, for instance, I want to make something like this also. Am I always going to be making reference to the financial statements only, or is there another place that I could actually get whatever it is that I actually need from?
Well, so you got to slow down. I
I
couldn't understand what you're saying.
Okay, what I'm trying to say is that, you were making reference to the financial statement of Snapchat while you were making your explanations. Now, my question is, are we just going to be making reference to the financial statement only, or is there any other place that we can actually find other information that will be necessary to make the projections and the judgments that we're actually going to be putting into into our assumptions, sir?
Well, the first thing is that when we consider the financial statements, the only part of this structure that I've got right here for forecasting, the only part of it that is financial statements is the part that's in the red box. The daily active users and the ARPUs is not in the financial statements. The financial statements is just the total revenue. This is supplemental information that's been provided by the company. So the first thing we want to do is try to use the supplemental information that we get from the company. But then we're going to look outside and try to think about the environment, what we see, what does the competition look like, and all that. So there's many other factors that will come into this. But today, what I'm presenting is a structure, not an absolute forecast. Other
Okay,
questions?
I understand.
Yep. Other
Thank you.
questions? Yep.
Yes. I'm thinking about the daily active user. The information from 2019 to 2021. It was the pandemic. Maybe people stay home, don't know what to do. Maybe they just apply for the Snapchat to try, but after the pandemic, maybe the daily active user may be down. And when the daily active user down, advertiser may see that the to advertising in this platform is not interesting anymore. That could be make the Snapchat the revenue getting worse or slow down.
Okay, so that's a good example of some sort of assumption that you could start to make. You could make an optimistic assumption here, but you could also make a pessimistic assumption that what you're saying is that, hey, these good numbers here are a one-off. They only happen because of the pandemic. Now we're back to normal and it isn't going to be like that anymore. That could be the strong bearish argument. The second bearish argument you could make is that the competition is stealing Snapchat's features, whether it's disappearing messages, whether it's, think about stories and reels that are happening on Instagram. And so there's a lot of reasons why you could have a negative assumption here. And keep in mind, we started this whole thing off by looking at the share price of the company. And let's just look at it. There's nobody optimistic about Snapchat in that share price for sure. So I think that it is possible that what you're saying is possible, that the market feels like it was just a good time for Snapchat, but it isn't going to be there anymore. Good question. Other questions or comments?
Hi, Dr. Stotts. I have one question.
Go for it.
It's actually based on, it's basically on accounting, like more of accounting rather than all of finance. So you said that Snapchat has a lot of cost for their programmers. And can we review that as can we like consider that cost as one of their direct costs?
It is now. Let's just look at that for a second. Hold on one second. Let's see if we go to hold on. Let's just go to Snapchat right here. If we go to Snapchat annual report, and we're going to download that from investor relations. So let's take a look at that annual report. And when we see it, what we're going to look at is the actual amount. Now, let's just see. I'm going to grab the PDF and we're going to look at it here together. So let's open up the PDF. It's opening right now. And now we've got the PDF. Now let's go ahead and look for the financial statements. So here we can go down and try to find them. They're right here. That's item 8, financial statements and supplemental information. Now there's stuff related to their accounting policy. There's their cash flow statement, and here's their revenue. So let's take a look at this statement right here. This is the income statement, and sorry, I'm trying to make it bigger. There we go. Hopefully, whoops, that moved too fast. Okay, so what we can see is cost of revenue. And in this case, it's going from 2019 to 2021. And we can see that cost of revenue went from 895, so about 900 up to about 1700. And that generally is going to be the cost related to the programmers, as an example. There's also research and development, but the sales and marketing and general administrative are part of SG&A. So the key thing here is understanding the cost of revenue. Now, we may try to find out more information about this, but what I would say, the key thing that I would say is this: when you're setting up a software program, you're going to need a lot of programmers to set it up and get it running, test it, and all that. Maybe you need 50 programmers that are doing that. Those 50 programmers are going to build the app and test it over time. But it's not like you need another 50 programmers when you start scaling up that app. And so my point that I'm saying about the gross profit margin rising is the fact that once you've invested in the programming team You don't need to add a lot of programmers to get a lot more volume in the business. So that's the point that I'm making. I'm not sure if I answered your question, but that's my my try at it. Omkar, did that answer your question?
Not actually. I was asking about the direct costs, but yeah, I get the explanation.
Okay. I tried. Okay. Other
Thank you.
questions? Yep. Any other questions or comments? All right. We're going to wrap it up. I'm going to end the session, the live session now, and everybody stay on in the boot camp because we're going to finish up the course. But for right now, I'm going to end it by saying tonight, I tried to demonstrate the idea of how do we go into the annual report, get the supplementary information, try to build some structure. But already you can see that my awesome valuation masterclass bootcamp students were questioning, wait a minute, why are you so optimistic? Or I think it's going to, this was a one-off and it's going to come down, right? So that's the whole point. You build the structure and then you start to look at what goes into that structure. And I think next week we'll be talking more about that. So I'm going to stop streaming here. So 1 second. Yep. Hold on.